Coming up on Market to Market, swatting away a malicious pest that's squeezing the cattle trade. How pork producers are working through three big issues facing their industry. And commodity market analysis with Sue Martin next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Family owned and operated for more than 60 years. Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, August 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The new home building market has been one of the economy's bright spots for much of the last 5 years. However, in July, Commerce Department data showed a 0.6% drop in the new construction market, and it was down more than 8% from a year ago. Orders for durable goods, items meant to last 3 years or more, slipped by 2.8% last month. Fewer requests for non-defense aircraft drove much of the drop, though machinery orders moved higher. The PCE tracks goods and services purchased by consumers. The mark was up 0.2% on the month and up by 2.6% in year-over-year readings. Consumers are always a key part of the economy, and often what could happen to them is often overlooked in reports. The beef industry is looking at record prices for live cattle and feeders, while consumers keep paying the price at the meat counter. But one small factor could keep making a big impact on both sides of the farm gate. Peter Tubbs reports.
This week, Mexico reported that new cases of New World screwworm in the country have jumped 50% since July of this year, and disease officials in the country have identified over 5,000 cases in animals, with 600 still active. The USDA has announced a $680 million plan to increase production of sterile screwworm flies, which are used to eradicate active cases of screwworms. A New World screwworm case was first identified in southern Mexico in November of 2024, which led to the border being closed to the importation of animal commodities. The border has been open and closed over the past 9 months, with the third suspension to animal traffic in July. The border closings are straining the supply chain of cattle destined for the U.S. market.
When you look at the U.S. beef cattle industry, it really is an integrated North American supply chain, including both Canada and Mexico. So anytime there is a disruption with either our northern or southern border, it does have a direct impact on us as U.S. cattle producers. We have a lot of cattle feeders right now that are struggling to be able to keep their feedlots up and going because they cannot bring feeders out of Mexico. That, of course, could have a trickle-down impact on whether or not we can maintain packing capacity in those areas.
The parasites have been described as flying piranhas, which eat their hosts from the inside and can kill a steer in 7 to 10 days. Screwworms can also be spread by deer, feral pigs, and even birds. Warm-blooded animals can serve as hosts for the parasitic larvae, which eventually develop into adult flies. The screwworm was eradicated from the United States in 1966 and from all of Central America in 2001. From Market to Market, I'm Peter Tubbs.
The speed and intensity of change in the pork industry has been a lot for producers to contend with in 2025. The National Pork Producers Council spent much of the year trying to get a repeal of Proposition 12. That's the mandate on space for animals in confinement. They're trying to get that into the next farm bill. The release, though, of the MAHA report added a new front. This, along with an ever-changing trade war, has been the focus of NPPC's President Dwayne Statler. Our conversation is part of the next MTOM podcast and is this week's cover story.
Well, words of the Secretary of Agriculture is we've got, concerns on Prop 12, and then we're also got concerns on the labor, and then we're just got a few concerns about some of the things in MAHA. Just wanting some actual answers rather than some, copies of drafts that might be intended for use or not intended for use. Just what is going to be the examples that we're going to, guidelines that we're going to go by.
And you'd like to see the details because then you can plan. Are you of that mindset?
Yes, we need the details. We've got two big concerns. The details is in the classifications of processed, ultra processed, and whatever. They seem to leave out the processed step and they're putting everything into ultra processed. And I just have a problem with that myself, and so does the industry, that when you're talking about ultra processed, I don't consider sausage, ground pork that's had some salt and pepper added to it to be sold as ultra processed. But when you only have the one classification, they're either talking about, they're just talking about ultra processed. That's where it could fall into. Well, is it or isn't it?
Do you know what the room is and where you can be in it to help in that conversation?
Well, we were invited in just the same as what the crop people were. Everybody was invited in to the White House there some time ago. We expressed those concerns. We have turned in, we were asked for more information. So our staff put together, some ideas on, coming up with the process, what is processed, what is ultra processed, and let's try to protect, dense protein, that is good protein, but we haven't heard back.
You were probably thinking the majority of your term was going to be spent on Prop 12.
And it has been. My first year on the board, we made the decision to go, to go to the Supreme Court. I mean, and the whole plan was we're going to, go to California. We're going to lose. We're going to go to the Ninth Circuit. Hopefully we're going to lose. So we get to the Supreme Court. And we knew before we ever made that decision as a board, Paul, that we had producers that at that point in time, they were all upset that we didn't do enough to try to stop this. Well, we didn't have $25 million to throw at that campaign. And if we'd have threw 25, they'd have come back with 35. We don't have the deep pockets that they did. The activists wanted to divide the producers. And they did, because we've got those now that have went to Prop 12, which is fine, because they're, even with what we do on stopping this, of carrying on to the other states, if people in California want to have Prop 12 type meat, those producers should be getting a premium for that. Both GTs and the Henson bill to save our bacon, it does nothing to do to strip the right of the California people to have their Prop 12, but it stops this from being a patchwork that there will be no more of this across the country.
Do you get the sense that that bill, the bacon bill that you're referring to, has a better chance of passing than getting some of the language into a farm bill and a larger package?
I will take either way we can get it across the line, Paul. I think there's a chance for one or the other. I don't know whether. I can't be hard on GT Thompson, because he said we're going to get this done in reconciliation. And a lot of people didn't think that was going to happen. He is adamant. I talked with him just 2 weeks ago that we are going to get a 2.0 or skinny farm bill across the line. And if he does that, we're in.
Is it moving well domestically versus internationally, specifically as we talk trade?
I think we're picking up domestically. Trade is, a real issue for us. All the trade deals are, not exactly defined yet, and they're still getting wrote. We're on top of that. I think where there's going to be some openings.
How long can you hold out for details on some of these trade deals that will help pork producers across the U.S.?
Well, a little bit of a history lesson, Paul, is normally when you did the trade deals the old-fashioned way, that took up to 2 years before you did it. This is on a fast track. Now, they said they will never get 90 deals in 90 days, and that's proven true. But trying to get this stuff down, there's two problems with what we're trying to do. It's a lot of information that they have to get put forth in these trade deals. I mean, you're talking not only our products, but everybody else's products. I mean, automobiles, tools, you name it, you're going with. And the other problem of it is this is on a piece of paper, just like an executive order. And then we have a few people, a few Republicans on the Hill that think that maybe we shouldn't be part of the WTO anymore. Well, hold back, boys, because if we're not part of the WTO, and if someone just comes in and reverses all these executive orders that this president has wrote for these trade deals, then we're going to revert back to our old trade deals that we've had. And if we're not a member of the WTO, we won't have any reciprocal action to go back to try to get us to that part if we're not a member of the WTO. We'll have, our old legislative things will not be of existence. So, yes, we do still need to be a member of that so that if something happens with these trade deals, we still preserve everything that has been legislatively passed and these agreements with countries in the past that would still have some teeth to them.
The full MTOM episode will release Tuesday.
Next, the market-to-market report.
New export sales provided some spark to corn futures while the wheat market dealt with the final pressure of harvest. For the week, the nearby wheat contract added 7 cents and the December corn contract gained 9 cents. China purchased some cargoes from Brazil, leaving the U.S. out of the market for another week. The November soybean contract lost 23 cents, while September meal declined $4.90 per ton. December cotton shrank by $1.48 per hundredweight. Over in the dairy parlor, October Class 3 milk futures improved 14 cents. The livestock market was higher. October cattle added $1.77. October feeders put on $1.98. And the October lean hog contract expanded by $3.83. In the currency markets, the U.S. dollar index improved 19 ticks. October crude oil gained 31 cents per barrel. COMEX gold added $92.20 per ounce. And the Goldman Sachs Commodity Index was up by more than 3 points to settle at 548.10. Joining us now, regular market analyst Sue Martin. Hello, Sue.
Hi there.
Harvest pressure in wheat. When is that story going to end?
Well, I think we've maybe seen a low in wheat here this past week. Seasonally, wheat tries to put a low in by Friday, right before we move into Labor Day weekend or September. And it usually also is enhanced by the fact that globally, most countries are done harvesting wheat as well. And I think that when I look at the wheat market, I still think it's a market that has potential. And of course, the corn market certainly offered some help this week as well, closing higher for the month. And so I think that puts some support under the wheat market too.
But they're going to need more than just a friend. Are they going to need some export sales, maybe a resolution of some world global issues? Maybe India comes on to buy. Which of those has the most promise?
Well, I think for now there's thought that Vietnam, Bangladesh, and Indonesia will be coming in to buy. And that's thought to be part of the Trump agreements. And then the other thing is you look at the Black Sea, and part of our situation with prices remaining so low and not very robust, so to speak, is because Russia's got to pay for a war, and therefore their values of wheat are low and have been ever since we basically seen them start the war, and we peaked at a high and came down. So we have to compete. And right now, I would say we look at Russia's crop. Even Ukraine's experiencing something similar. It's been very dry, but yet the spring wheat in Russia is thought to be yielding good, but it's very poor quality because they had a lot of rain in that area. And they use that to blend off with. So not always great there. And then Ukraine, of course, very dry as well, and less production. So, the global side of the equation sounds like we're still going to have plenty of wheat. But right now, I would say maybe the U.S. is a little competitive.
Quality. That's a story that's starting to develop in the corn market. There's this thought that crop tours and rust and these things are starting to impact traders. Do you believe that?
I think so. We closed December corn higher for the month of August, which should portend to try to push out our high of August in September. When we come back after the holiday weekend, I think the traders' focus is going to be about that report on September 12th and thinking, what will NASS do with the yield? Will they bring it down off of 188.8? I think they will. At worst, they'll stay unchanged, but I think they'll come down. The shock would be if they tried to add to it, because nobody believe it. But, the southern rust, if you're north of I-70, the southern rust is really taking a toll. And I would have to say, if you have a severe case of southern rust, it can take 45% of your yield. And the good thing about the southern rust is that it does not winter over like tar spot does. So that will be the good side of it. But still, it's bringing crops home quicker. I've heard reports out of Illinois where the stock condition is not good and stocks are falling over because of it. So it's going to be an interesting time, but it certainly, I think, has all of a sudden gotten everyone thinking the yield's going down and just how much is it going down.
So if I'm a producer sitting here going, I have a rally, I should take advantage of this, versus what you're just saying is there's potential to rise. What should I be doing right now? What's my range that I'm looking at?
Well, I think first off, I think the one thing for corn and soybeans as well that we have to keep in mind is what's the weather going to be like here in September? Now, we're arid and dry now, but the weather sources that we're following that we have found to be very accurate this year and have been for probably the last 3 years are predicting that by mid-September we're going to turn cooler and wetter. Not a good thing for if you're wanting to harvest beans or corn. And in the meantime, it reminds me of the year of 2014 where we had a wet fall. It started in September, and I'm kind of intermixing markets here a little bit. But for example, the soy oil, the traders were short soy oil and long soy meal, and that spread premium just wrapped them. I mean, they took huge losses because all of a sudden, by the time we got into the first day, trading day of October, we put lows in corn and in beans, and the market rallied quite sharply. In 2014, we went from, on December corn, we went from a price of $3.18, I think it was, and a quarter, to a high of $3.98 and a half, I think is the rally on that. On the beans, we went from $9.01 up to $10.86. And I think that when you're already starting to look at the greatest yield potential, and now you're ratcheting it back, and then if we turn wet, I think all of a sudden the commercials, the elevators and what have you, and ethanol plants are going to think, oh my goodness, I'm going to have to improve this basis to see if I can get them to try to bring me something. And of course, we all know that there's plenty of bin space on farms available now too.
Is there? Because that's a big concern, is that not everybody thinks there's enough space to handle this crop on site.
Well, as large as it is because of all the added acres and because of the 188.8, or as Arlen Suderman, 188.1, I would have to say, we're going to have a big crop, but it's a matter of how big. I think it's not as big as they originally thought. And the market has seen short covering because of this. So we closed higher for the month. I think we're going to make some higher highs just on the anticipation of how much will we shave off this yield.
I'll pin you quick. Corn 450 potential for December still here in the next month?
If we turn wet like it's
Okay.
forecast, I think you could see that in October.
All right, well then in beans, I want to throw this in here because this question I think is also part of the conversation. Boyce in North Dakota wants to know, Sue, does Brazil have enough soybeans for China to last until Brazil's next harvest? Or will China have to come to us at some point this fall or winter? Specifically, let's talk beans.
Well, I think that you've got China pretty well bought up through October. November Dece, not so much, but they've been buying. And I sort of think it's kind of a way of rubbing our face in it when they go to Brazil and keep buying here of late for October, November delivery. The crush has been pretty active in China. It's also been active in the U.S. and it's been active in Brazil. And so I think that when we look at the crush, and you look at soy meal, and actually our commitments of soy meal are running about 30% ahead of the 10-year average. And the new crop coming up is basically running about 40% over the 5-year average. So we've got good demand for soy meal at this time, but then cure for low prices is low prices. And but I look at China, and I think they're basically rubbing our nose in it because back in 2018-19, they were taking beans. And then they turned and banned the imports of beans. But then good old COFCO International Grains were taking about 95 or so % of the deliveries until everybody caught on to them, and then they disappeared. Well, they're probably using another entity and coming in under their umbrella. So maybe they're getting U.S. beans and we just don't know it.
It's always possible. We'll continue our soybean discussion. Sue, on Sunday, you were asked on our panel about cattle, and you have a theory that this live cattle market I should say, only $1 rally this week. Is that, you think that rally is far from over?
Well, I think first off, I looked at the years since 1976, and we had 4 other years where we made higher highs with the June contract for the year, and then the August contract came on and took that high out, and then the 1 year, 1980, put a high in August, and then we broke into December. And interestingly, 1981 did not make higher highs. Then the next year was 2008. Well, that was the year that China had the Beijing Olympics. And so they had been all about building hotels and nice restaurants. Cabbies had to have clean new vehicles. And so I think that was a year that, yes, June cattle made higher highs. And then the fall contracts came on. August made higher highs, I believe, in July. And then went inside range in August, and then the October contract stuck a high in September. That year, we broke prices from that high into December by $34. And then in the next year and we did not make higher highs in 2009. And I think it's because the Beijing Olympics, they were importing a lot of beef, and then after the Olympics were pretty much done, they didn't need us. And then the next year was 2014. And that year, we basically rallied again. August took out the high in July, inside range month in the month of August. And then the October came on and made higher highs in September, even might have went on into October. And then the December contract that year broke close to $30.
So you're looking at a technical thing right here more than anything.
Yes, but there's another side to this.
And you only got a few seconds, sorry.
Okay. Like I say, I told that story about talking. But the thing is that when you have a cattle market that has pushed like this one, and we have tight numbers in our on our radar for next year. But the thing is that we have to keep in mind this New World screwworm. I read today it has expanded 56% into August 17th over what it did in July. That's a lot. But part of, I think, what's fueling that is, if you notice, you look at Texas, Oklahoma, they're catching rains. It's those wind currents that are humid and wet that are coming up, and that feeds that New World screwworm.
That'll be something we have to watch, and we'll have to talk about feeders in more depth and hogs as well in Market Plus.
You got it.
So I appreciate your time there, Sue. Thank you so very much.
Thank you.
All right, Sue Martin, everyone. And I want to let you know that you have been watching the analysis segment. And in a moment, we will continue our discussion in an online-only segment. Search Market Plus with Sue Martin wherever you get your podcast to hear that conversation, or go to our website of markettomarket.org. I do want to say thank you for checking out the images and stories from behind the scenes of the 50th season celebration in our latest Market to Market Insider newsletter. We told you a little bit about Sue. We showed a picture of her being here. Sign up to know what's next at our website of markettomarket.org. Next week, we are going to honor the tradition of cheese making. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Family owned and operated for more than 60 years, Sukup Manufacturing is a full-service provider of grain handling, storage, and drying equipment, helping farmers feed and fuel the world.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.